Hi, everyone. Thank you for being here today. Thank you for showing up to the weekly Ask Me Anything that I do to answer questions for people who have questions about their tax, international business, basically anything that comes international business, immigration, tax. I'm not an immigration expert or a lawyer or anything, but I have a lot of experience doing it, and I'm just here to help however I can. A lot of these questions are operational. A lot of them have to do with the actual tax law, which is what I'm most specifically expertised in. But I have a lot of experience with all kinds of stuff. So I'm going to get into some of these questions and we can get started. I'm going to do English first. We'll do Spanish later. This first question is for a U.S. citizen who is living offshore and in regards to the foreign earned income exclusion. So the initial question was, can I claim the foreign earned income exclusion if I'm not subject to taxes in that country? So there's a couple different ways to look at it at this first question, because I think many countries may not have a tax that you have to pay, but you would be subject to taxes there. So if you're getting paid from a U.S. company or from a local company, but you don't have to pay taxes, it doesn't mean you're not subject to taxes. So generally, this is referring to, from my understanding, again, without previously researching this, is that you're not exempt from taxes. So if you're not like filed some paperwork to be exempt from taxes there. So otherwise, if you just move to a country and you just end up not having to pay taxes on your earnings, it doesn't mean you're not subject to taxes. It just means potentially the tax rate on the money you're earning is zero, or it's not required to, you don't require to pay tax on it. And then the second concept here is when do you qualify to claim the foreign earned income exclusion? So there's two tests. There's the physical presence test and the bona fide residence test. The physical presence test means you have to basically stay in the foreign country as a resident 330 out of a 365-day rolling period. That means that if you go somewhere in March, but you stay the whole year, you can potentially qualify for the exclusion prorated starting March. However, from my understanding and my memory, you don't qualify for the bona fide residence test unless you were there at the beginning of the year. For example, if you moved there in March, you wouldn't be a bona fide resident until the next year. The physical presence test is the only option for the first year you move somewhere. So if you moved in December 30th, you can be a bona fide resident for the whole entirety of the year of 2021 if you move there December 30th, 2020. So that's kind of the difference. If you go into if you go to, in this example, it's Albania. If you go to Albania and you're going to become a permanent resident in Albania, then if you go in March, but then you spend 2 months in the US, it resets the clock for your physical presence test. So it's a little bit complicated to legally do it the right way. And I think that we could probably find a way to make you qualify, but the facts don't look good in this instance. If you go in and then leave for 2 months, it doesn't look like you would qualify for that period. You would qualify for the next year, you'd qualify for that stuff, but not that period. And if this person asking this question was here, I'd probably go through the forms a little bit more. Oh, beautiful. I'm gonna answer your question next, Mateo. But sorry. But yeah, I'm not going to go into too much more detail about this because it's really case by case. But I think the general facts that I outlined for the foreign earned income exclusion, like how does the foreign earned income exclusion work, would be like the question there. I think that's a really good explanation. So if you have foreign earned income, if you're earning the income abroad and you qualify for the physical presence test or the bona fide residence test, which I already discussed, then you can exclude up to the first 125,000 or so of your income from U.S. taxes. So it's a great opportunity for people who are U.S. residents and citizens who have to pay U.S. taxes but live abroad. In case you're not paying a lot of taxes in the country you're at, you can still exclude the income. The other option, of course, is the foreign tax credit. But in this example, my friends going to Albania are not paying taxes in Albania. Okay, question number 2. I have a question here from a guy live in the meeting with me. We have a question from Mateo. we have 3 companies, online businesses, real estate, and trucking. How do we do tax planning? Because we currently live in Texas and we're planning to move to Spain next year. Are you a US citizen or a green card holder, Mateo? Because that's very important for this question, because when you, irregardless, businesses that are located in the US and doing business in US, most easily referenced is the real estate businesses. Then if you have a real estate business, you're gonna have to pay tax in the US no matter what your residency is. So if you're an Albanian who never been to the US ever, you still have to pay tax on your rental real estate in Texas. If you're a US citizen, like my friends here are, you still have to pay taxes in the US. What's rough is that you have to really navigate the rules of Spain. The tax rates in Spain are higher, and you need to make sure that you structure this correctly so that you're not paying double taxes, because Spain is very aggressive. And you're not really going to have a US tax issue living in Spain. It's really going to be Spain issues, because Spain is, like I said, very aggressive with the taxation. You may not want to enter into the Spain tax system, aka like opening a company in Spain and opening bank accounts and operating in Spain. You may be required to. I would definitely recommend seeking out tax advice locally in Spain, because like I said, it's very high tax rates, and it's very litigious, and they're famously going after famous people and pursuing them for taxes. So if you're living in Spain and you become a Spain resident, you have some potential issues. So the ways you get around this is, this is really a call for like a paid call, like a separate call where we look at numbers and we actually make a plan. But like a couple ideas and things that we could consider is using U.S. corporations for the U.S. Businesses. You wouldn't have pass-through taxation, but you wouldn't have a risk of being taxed in Spain. And you would basically accumulate the profits here in the corps, and you can issue dividends and then deal with it that way. But you really need to take a holistic approach to the tax planning. The online business, I would still keep them all in U.S. companies. I'd probably keep them all owned as they're owned if they have 3 separate companies and entities. It's just determining how you run the profits and how you run the cash flow, and maybe you put them all underneath a trust or a holding company, depending on how long you're moving to Spain, in your intentions there. So there's a lot that goes into it. If you're going to live in Spain forever, then maybe we set up, and your assets are worth a lot. Maybe we set up some kind of trust or something before you leave. Maybe we put it all in a holding company. So we have to factor in your intentions, where you want to live, how long you're going to live there, where you're going to pay taxes. We have to factor in the money we're talking about. If these are really valuable businesses in real estate, then you have to factor in the ownership, maybe estate planning, having, maybe even if you have grantor trusts, owning that, and then you have to factor in like the flows of money. So if you're not sending money over to Spain, it's like a pretty low chance, from my experience, that Spain is going to come after you or give you a hard time. And what I would recommend is probably use your US accounts while you're in Spain the whole time. I spent a month in Spain this year, and it was, I just used my US credit cards and debit cards and pulled cash out that way, and I never had an issue. So there's a lot of things to consider when asking about international tax planning for a move to another country. You need to get a US and a Spain advisor involved. You need to take a holistic view to your objectives and goals, and then you need to look at your operations and your needs locally. So yeah, there's a lot to consider for a one sentence question, open-ended question for me. So I think my answer here gives you a good starting spot of what you need to consider, and with the information you need to present and who you need to talk to. And then it all comes down to analyzing your specific situation and moving forward that way. But I can definitely help you with the US part, all of it. But I would really recommend, depending on the scale of all this stuff, to get a Spain advisor involved as well, just so even if you don't report stuff in Spain, you understand your risk tolerance and you accept that yourself. So great question. Thanks for coming to the call and asking that question. And And yeah, look forward to helping you guys. I'm in Houston now too. I don't have a formal office set up yet, but I would be happy to meet if it made sense to you around here. So good luck in Spain, and thanks for the question. Hope that was helpful. Okay, so this is a quick one that I answered in the Telegram group, but one of our Dominican Telegram friends is has an LLC and he wants to make it a multi-member LLC. He's going to put his Dominican company as a 1% owner of his LLC, so it can be multi-member taxed as a partnership. The real question he has here is, how do I manage the signing and decision making? I mean, you own all the companies, so you have the rights to sign on behalf of all the companies. And yeah, you sign the operating agreement for both the company and yourself as the president of that company and the president and your own direct ownership. It won't impede taxation, partnership taxation treatment, because there's going to be two separate owners. So it's all good and it works out, and you don't have to overthink it. Next question. Oh, this is a great question, and I have to follow out with someone who did this. Okay, so here's the question. I have a US LLC, taxed as a partnership in Texas. I provide translation services through my website from Texas. It's my understanding that I should not add sales tax. If this is correct, what if I exceed the amount of money or transactions? Is there a limit in any way? So I talked about this before. Texas actually will charge sales taxes on certain activities performed, certain services performed in the state of Texas. You can look through the Texas website. I've done that in the past. You just basically go on Google and you type what service, Texas sales tax, which services are subject to tax. And the top 5 answers is going to be a website with Texas law and some summaries. It's pretty well spoken. I'm not going to go through all of it right now, but sometimes services, if performed and delivered in Texas, are subject to Texas sales taxes. Again, it's not like an exact science. Texas isn't, from my understanding, there's no way for them to follow up and know that you're doing this, but it's the right way to do it. And it's only an additional charge for your clients. It's not an additional expense for you. That said, there's a follow-up question. Question 3B. One of my translators, a contractor, is in Mexico. Should I withhold taxes for his services to my company? So the second part of the question is, do I have to withhold taxes on payments to foreign contractors? And the answer is definitely no. If it's a payments for services to someone performing the service outside the U.S., there's no withholding taxes. There's only withholding taxes if you were paying him royalties for a patent or some kind of agreement, like royalties or dividends or rental income or any other fixed, determinable annual or periodic income as defined by the IRS. Part 3, finally, if I should not, how am I supposed to file taxes to the IRS for my services? How much should I estimate when it's time to file taxes? That's a confusing question. If you're a U.S. resident, which it looks like, and you're paying taxes in the U.S., you get your income, you take out your business expenses, not your house rent, your office rent, and not your every sandwich you buy, only meals with clients, but your business expenses. And the bottom line is your net income. If you're doing pretty well, there might be some other tax strategies we can take advantage of, but in general, it's, income minus expenses is what you pay tax on. That's a great question. Does the IRS care about how my company spends its money? Do I have to justify expenses in any way? So great question. If you are a foreign-owned single-member LLC and you have no U.S. trade or business, then I would kind of say the IRS does not care about how your company spends its money. If you are me and you live in the U.S. and you have a U.S. company and a business and you're running it through a U.S. company, the IRS could audit me, and in that case, they would care about how I spend my money. However, if I properly account for all of my expenses, it's not as much of an issue. So I can make $10,000 and spend it all on stuff that has nothing to do with my business. Let's say I bought like 5 snowboards. If I buy 5 snowboards, the IRS doesn't care that I did that. They will care if I'm saying these are business expenses, and they're not. You may have to justify business expenses by explaining the purpose of the expense, by explaining what you did, like justify saying, like basically showing the IRS that yes, it's for business, but you don't need it, you know, as long as it's reasonable, they generally accept it, you know, and they're going to go based on your bank transaction. So if you have on your bank statement, if you have a payment to I'm a whatever, a CPA, a tax advisor, if I have a payment to REI, which is a sporting goods company, they're going to say, what's this bit? They might make me justify that. And I might have to explain it. I might have to show a receipt. I might have to do something. But if I'm sending money to my guy Danny for marketing services, that's pretty easy because I'm sending money to another person and I can say this is what he does and I can explain it. So you may have to justify expenses if you're deducting them, but if you have a foreign-owned single member or multi-member LLC that has no U.S. trade or business and is not subject to taxes, you really don't have to spend. I'm going to be mad as an American taxpayer if you have to spend time justifying your expenses because it's a waste of American resources to try and justify expenses for a business that's not subject to tax. So I've never seen it happen and I don't expect it to happen. However, if you are paying taxes in the US, yeah, sure, but you're going to have to potentially justify your expenses and explain them if you get audited. So I think that's a really good answer. Not to toot my own horn, but I think that's a really clear answer and hopefully helpful for you. So again, in summary, if you are a foreign person and has an LLC, multi or single member, and you're not paying US taxes legally and you're doing it correct, then you don't have to really, you can consider everything out of your account a distribution and it wouldn't have a different impact on your tax results. So thanks for asking. This is a follow-up to that question, and it's a similar question, really. If I buy Bitcoin in an exchange with my LLC's corporate account, is that an expense, or do I have to declare it as a company asset? For me, spending money in BTC would be a great way to have zero profits at the end of the year. So I'm getting this from a lot of my people from Spain. These guys are so from the U.S. tax perspective, it's the same thing. If you're not paying U.S. taxes, it doesn't really matter what you do. It doesn't matter if it's all a distribution or all an asset, you're still not paying taxes. But for me, again, a US taxpayer, if I buy 10,000, if I get that same $10,000 and I buy $10,000 worth of Bitcoin, it's not an expense until I send the Bitcoin to somebody. If I just buy Bitcoin and keep it in my wallet, and even if the Bitcoin goes to zero, if I don't sell the Bitcoin, I don't have a loss. I don't have an expense. It's just have a worthless asset. Until I send it somewhere or get rid of it or whatever, it is an asset. That's company assets. Now, I had that little statement in the beginning because if you are a Spain person, from my understanding, and not just Spain but other countries, it's crazy because I get a lot of different opinions from professionals in other countries. I talked to a client who was with her UK accountant today or yesterday, and basically if you're in the UK or you're in Spain, a lot of these countries are not making you pay tax. Like I get some advisors say you don't have to pay tax on the results of your LLC. You only pay tax on what you send to yourself in the home country. From my understanding, for most developed countries, like, and again, we're talking Spain and the UK, I understood it as, and again, not a Spain tax expert at all. I have a lot of clients in Spain, but I hear different things. And it's really crazy, even from different advisors. But my understanding was that if you have an LLC and you make $10,000 and that's your profits, then you're required to pay tax in Spain on your profits, whether you bring it back or not, because it's a pass-through entity. However, I've heard different things where if you don't bring it back, you don't pay taxes. They wouldn't necessarily know about it. And then other people are doing this where they're like spending the money. So it's leaving the account and it's going on Web3, it's going on the blockchain. You say, look, Spain, it's an expense. I have no income. And they're none the wiser. So, you can be a little trickier with the filings, but it all comes down to your personal risk tolerance and the advice you're getting. So to answer your question, technically, yes, it's not an expense if you buy Bitcoin. and you just keep it. If you buy it and send it somewhere, sure, it's an expense. If you buy it and sell it at a loss, sure, it's a loss. But if you just buy it and hold it, not really technically an expense from a U.S. tax standpoint. Going back to my last question, if you're not paying taxes, it doesn't really matter. And if you're not paying taxes in the U.S., so some people, if that's how they want to mitigate their risk locally for taking an aggressive tax position in a country like Spain, sure, do it. That's up to you. That's your decision and how you want to, your acceptable level of risk, and that's how you want to manage it. That's great, and I can help you facilitate that goal and that dream. Luckily for me, I am not licensed in Spain, so I can give you all kinds of crazy advice you want in Spain, but it's not tax advice, and it's just helping you do it operationally. So I'm glad you stayed, Mateo, because you're going to Spain, and you can see that a lot of like the information sharing isn't automatic. So when you're over there, it's not like Spain gets a report from the U.S. of every Spain citizen who has an LLC and a bank account, because it just doesn't work like that. Obviously, if they want it, they can get it, whatever, but it's just not auto like that. So great question. I went off in great detail on that question. I hope it was helpful. If you have follow-up questions, let her rip. We'll go to the next one. Okay. This is a great question. I have a nonprofit. Do I need a resale certificate to sell t-shirts and promotional items on our website? That's great. So I have questions. I wish you were here. I know you're probably not here, but if you have a nonprofit, based on my client base, I want to know, is it a nonprofit registered in the US? Is it a nonprofit registered in another country? A nonprofit entity is basically a corporate entity or an LLC that elects and applies for nonprofit tax treatment with the IRS. So then it becomes a nonprofit. Many international nonprofits assume that they're a nonprofit in the US, but no, if you're an international nonprofit, you have to do an application and apply for US tax nonprofit status as well. And this is required in order to justify the charitable deductions for your donors. So to get to your question, I'd like to bring that up first because a lot of people will open a company on the Florida website and click the button and say it's a nonprofit and say, I got a nonprofit. It's way more complicated than that because you have to actually request nonprofit tax status from the IRS. You have to apply for it on form 1023. Don't audit me there because I don't know the exact form. I think it's it. And then if you're a US citizen, you can potentially do it with a 1023 EZ. And I know that's not the question. I'm telling you all this because I don't know the answer to the question. So I want to add some value to your question. Do I need a resale certificate to sell t-shirts and promotional items? First of all, you don't need a resale certificate to sell stuff. You need a resale certificate for when you're buying wholesale so that the person who you're buying from does not charge you sales taxes. So I'll repeat that a little slower because I know I talk fast and these are high-level concepts that I deal with every day, but you probably don't. You do not need a resale certificate to sell stuff on the internet. You need a resale certificate in order to stop the people you're buying from, your wholesalers, from charging you sales taxes. So if you sell t-shirts, the people you're buying from, if they're charging you sales taxes, then you would probably want a resale certificate because that would get them to stop charging you sales taxes. And then you would be required to charge sales taxes to the people in the state with which you have a resale certificate right away. And then into other states with which you have economic or physical nexus. So if you are buying t-shirts from this company and they charge you 7% sales tax, you get a Florida resale certificate or whatever state. I like Florida. They have great resale certificates. And then you give it to them. They stop withholding 7%. Then you have to withhold the 7% on the sales to people inside of Florida. I really don't think there is exemptions from sales taxes for nonprofits because the sales tax isn't really a tax to the nonprofit. It's a tax to the consumer. It's a consumption tax. So it's really a tax to the people buying t-shirts. So, and even then, if you're a nonprofit, you charge $100 for a t-shirt, at the end of the year, the statement they get says that, they donated $100, only $80 is deductible because they bought a t-shirt and they received a t-shirt worth $20. So only $80 is deductible. So that has to all be there, like ironed out at the end of the year. I don't do a ton of nonprofit work. I know how to open nonprofits, file them, organize them. I know the rules about it, but it's a lot of work to successfully run a US nonprofit. There's a lot of filing, a lot of documentation requirements, and it's a lot to do. And generally, there's people that specialize only working with nonprofits. I can tell you about this stuff pretty confidently, but in terms of the operations, the annual filing, Form 990, and all of that stuff, there's a lot to it. So, you know, you're going to have to come back with more questions. I hope this answered your question here. I gave you way more information than you bargained for with this question. Okay, so thanks for asking. Is the amount of sales tax I'm obligated to charge my customers and then pay the state dependent one where I, the sole proprietor, live, where my business is registered, where the transaction took place? Don't understand the question. Is the amount? Oh, is the amount I'm obligated to charge and then pay to the state dependent on where you live or where you're registered? Okay, so I'm going to restate the question for you. How do I determine what sales tax to charge my customers when I'm selling stuff? So sales taxes are all dependent on where the customer lives. It doesn't matter where you live. It matters where your customers live. If you live in Alaska and you sell only to people in Florida, you're not paying any Alaska sales taxes. You're paying Florida sales taxes. And honestly, you're not paying sales taxes. Your customers are paying the taxes. You're collecting the taxes and you're sending them to Florida on behalf of your customers. So it matters not where the transaction takes place. It's generally on the shipping address of the transaction. So it generally depends on where it's being shipped. And that's how it's going to generally be run. I worked with a lot of luxury retail companies in the past. And they had stores in New York, and many people would go to the store in New York, and instead of buying it in New York and paying New York sales taxes, they would buy it, they would have it shipped to their house in New Jersey, so they'd be subject to New Jersey sales taxes. And then I think some of the companies had no nexus in New Jersey, because this is before economic nexus. Economic nexus is only since 2018. So in 2016, 2015, you could have a store that was located in New York, and they could sell to their clients and they could ship to their clients in New Jersey. And as long as they had no physical presence in New Jersey, there would be no sales taxes. That's all changed since the Wayfair case in 2018. So now there is physical nexus, and it's a huge problem for those people. But I think that example kind of illustrates and beats down on the point. It depends on where the goods are being shipped to. It does depend on where they're purchased, but ultimately it's going to be where they're shipped to, because you can say they were purchased online, and that's where the sales tax is paid and charged. And there's no more loopholing this, because now they're going to pass the physical nexus or the economic nexus in New Jersey and have to just charge them New Jersey sales tax. So that's why people sometimes get tricky. And like, if you buy a boat and you don't want to pay boat sales tax, you have the boat delivered to a state that doesn't charge sales taxes on boats. And I've done it with airplanes too. If I have an airplane delivered to a place where there's no sales tax, and obviously there's rules and exceptions and ways to get around this, and ways to where the states will kind of catch you, but it's based on where the customer lives and where the customer is, all of the stuff. So I think it's a good question. I think it's a little confusing the way you worded it, but it's a good question in general, and I hope that illustrates it. I could sit here and talk about these simple questions and go on tangents for so long, Danny. I could talk about questions forever. But thanks for the question. Okay, I'm going to restate this question for you too. If my LLC is multi-member and taxed as a partnership, please confirm I do not need to file Form 5472 and only the Form 1065. I restated that question poorly, but yes, if you have a single member LLC, you file the Form 5472 to disclose your related party transactions. If you have a multi-member LLC, 2 owners, then you file Form 1065. If you have a foreign, or if you have a U.S. corporation, you may also be required to file Form 5472 as well. This form was originally a form just for foreign-owned corporations, and only in the last 5 years did they change it for foreign-owned single-member LLCs as well. The 54, so generally you're filing a 5472 for a single member LLC, a 1065 for a multi-member, and if you have a corporate tax return, a corporation, you may also have to include the 5472 in your corporate tax filing. So that's also a good question. But yeah, you only have to do one or the other. You don't have to do both. Potentially, let me give you a way where you do both. If you open the LLC as a single member and then you add a member throughout the year, you have to get a new EIN number, because when a single member LLC gets a new member, you have to add a new EIN number. And you would file a 5472 for the first half of the year, probably mark it final, and then file a 1065 for the second half of the year when you were at 1065. So it's based on the period January 1st to December 31st and your classifications, entity classification during the year. Oh, great question. Are there any solutions to stop withholding taxes on a UK LTD selling on US Amazon? So I don't know what type of withholding taxes you're dealing with, because it could be, these withholding taxes might be sales taxes. They might be royalties, like if you're selling books. But generally, yeah, there's a way to stop. There are solutions to stop withholding taxes on US Amazon. So yes. And because that's a boring answer and it's only been 30 seconds, I'm going to elaborate on some examples. So it really does depend on what kind of taxes you're referring to. Generally, with Amazon's only going to withhold on royalty payments. So if you're selling books on Amazon, then they're going to withhold 30% on that, unless you give them a W-8BN with a treaty position. With the UK, it can go down to 10%, I believe, which isn't bad. But the answer is going to be open a US LLC and let's make a proper tax election. And even with a multi-member LLC, you can say it's a US entity and they'll stop withholding taxes. Does that mean you're not subject to any form of US taxes on that? Not necessarily, but it puts you in the driver's seat of how the taxes are withheld and paid. And we can find a way to really mitigate that depending on the scale and the amount of taxes being withheld. So I would recommend you schedule a call with me so that we can go through it in detail and look at the specific taxes, look at the amounts, and I can make recommendations, because it all comes down to, like I said in a prior question, the amounts in question that we're talking about always play an impact, the goals, and then like the facts and circumstances. So what you're trying to do, and what you want to do, and what's currently happening and what applies, that's how we're going to make recommendations on how to move forward with this issue. So great question. If you want a more detailed answer, give me a more detailed question. Great question. Hi, James. We registered our LLC through Stripe Atlas. We are 3 Indian guys. We each own 33% of the company each. Do we have to file 5472 or is 1120 enough? That's a great question. I believed it to be, sorry, I'm going to check this one because I thought Stripe Atlas only opens corporations. Stripe Atlas. It's a cool service because it gives you the payment processor with it, but it doesn't work for everyone. And I believe that you can't do LLCs if you're foreign people. I just don't think they do it. I think they make you do corporations. So my answer is confirm you have an LLC and not a corporation, because there's very different tax treatments. An LLC is passed through and a corporation pays US taxes. And second, I'll answer your question. So if you have an LLC and 3 Indian guys own the 33% of the company, you don't have to file a 5472 or the 1120. You have to file a form 1065 and report your results and withhold any taxes. If you have a US trade or business you have to withhold tax on your US source income from a US trade or business. It sounds like you probably don't. I mean, you're 3 Indian guys, you're probably performing a service and not in the US. That's what I'm going to assume here. But yeah, if it's like we answered in the last question, if you multi-member LLC files a 1065. Google search form 1065 and you'll see it on the top. But definitely confirm that you have an LLC, because if you have a corporation, then you do file the 1120, and you may not have a requirement for the 5472. But in any case, if you have 3 guys, I would probably get this done professionally, your tax filing. Between the 3 of you and between the confusion here, there's a difference between an LLC and a corp or an Inc. or an incorporation. They're very different. What are the best credit cards for U.S. citizen, for non-U.S. citizen LLC owners? So Mercury just released a credit card. I wish I had an affiliate link, but they kicked me out of their bank. So I got kicked out of Mercury, and I guess I can't use their credit card, but they just launched it. If you have over $50,000 in your Mercury account, apparently you would potentially qualify. I'm not sure about that. I'm going to be applying with some clients this week. This is like 2 weeks old. It's pretty new. For people from my non-US citizens from the UK, Canada, India, and a handful of other countries, Mexico, there's a way to get an Amex by using your local country, your home country credit score, which is really cool. It's a really cool option. It's not easy. It's a little tricky, and you have to kind of, be moving to the US technically. So, but that's a great option. American Express is some of the best credit cards because the limits increase based on your history of payments. So they're really business friendly, some of the best. Otherwise, it's pretty bleak out there for you guys. I'm sorry, but there's some secured credit cards you can get. A lot of them you need a credit score. Most of them you need a credit score. And in my research and what I've been dealing with, I've been working on this forever. Getting an ITIN and then building credit, the secured credit cards and small loans and things like that are complicated. And then once you build credit, you have to manually pull it and then present it like that. So I'm still waiting for some good credit card options. The reasons they don't do it is because, first of all, they're making so much money working with just Americans. These credit card companies are crushing it. Second, it's hard to determine the credit worthiness of someone without a credit score. They don't have methods for doing it. It should be on how much money you have, and you should be able to open secured cards, but it's just not like that. So the best credit cards are secured credit cards. They have some student credit cards in Amex if you can figure it out, and you can try the new Mercury card if you have money. But really, it's tough for non-US citizens to get credit cards. I've been helping clients try and get it for the longest with minimal success. Unfortunately, but I'm still working on it. Stay tuned, like, subscribe, share, join, whatever, all the groups. And if anything comes up, I'll be sharing it. Like this, the Mercury card just came out and they've been pretty non-resident friendly, but it's case by case there. And it might not even work for non-US citizens. We're going to find out soon. Here's a great question. I formed my LLC in 2019. I didn't make a tax return for the previous year because I had no income, but in 2021, 2022, I made my tax return even though you have zero income. I don't know what tax return you made. So I wonder, will I face any fines for not making my tax return for the first year of my LLC establishment, or is there something I should take action about it? Well, I hope you're watching this right now, and I should share this in my groups. Danny, if you're watching, share the video I made the other day in the Slack with the Telegram group. But basically, if you didn't file your 2019 or 2020 tax returns, your 5472s specifically, or your 1120s with the 5472s, the IRS is letting you file without any kind of penalties as long as you file before September 30th of 2022. So, if you file in the next 8 days, you can do it without any penalties per notice 2022-36. That's off the top of my head, so we'll see how my memory serves. But there's a notice out about that, and I just made another video about that. So, if you can do this in the next 8 days, happy to do it for you. I wish I would have been promoting this a little bit. Danny, you should also definitely promote it to my 5472 list that I got. But yeah, that's something that we can definitely help you with. But otherwise, I probably wouldn't file. To be honest with you, if you miss this deadline, you don't file by this time, I wouldn't file and hope that they don't ask about it. And historically they haven't, but they could. But I probably wouldn't do it, and just take that position and go that way. Good question, and I hope you see this before the 30th if you wanted to file.